Hey traders, 𝐼𝐞𝐥𝐜𝐸 or 𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, November 11th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, first things first, happy Veterans Day. Veterans Day has always been important to me and my family. So from me to you, I just wanted to say thank you to all the veterans out there. Your courage and sacrifice gives us the freedom to live, breathe, work, have goals, and without our vets, none of that would ever be possible. We honor you today and every day in that matter. So thank you. You guys are the true heroes. Now let's get down to business, go over some SPY stuff, what happened today. We didn't have a Turnaround Tuesday. We didn't really have an anything day today. Very slow, low participation, pretty much watching turtles watch paint dry. We'll get into some of the numbers when we go over inside the numbers, but today really wasn't a trader's tape. We are up 0.23%. We're up about $1.50, and if we zoom in a little, expand this out, we can see that we did manage to complete some unfinished business up above. That's this gap right here at 683.34. Now we do have some key overhead resistance above that number. You got 1, 2, 3 breakdown candles, and the high of those breakdown candles act as overhead resistance. We could get rid of my terrible drawing. So around the vicinity of these breakdown candle highs is going to be overhead resistance. It also happens to coincide right with a big fat semi-round number at 685. Okay, this area should jump right at you. Why? Because the market showed you that it was overhead resistance. Market made a high right here at around 685 and change and went in the other direction. Gapped up higher, retesting that area, came back down. Third time's the charm, came back to retest that area and fell back down. So it's not a secret number. That area is obviously resistance for the market. Speaking of secret numbers, we will have those numbers ready for Inside the Numbers and live room members. But I do believe that this is a place where the market shouldn't just waltz right through. If we grab a fib tool and go from this low right here, that was the woodshed day that we had in October, and then take it to this high right here, extend this out a bit, we'll just make sure that it's on the dot, and then right here you can see that we found support at the 75% retrace. Retraced exactly 75% of that move. Now we take a fib tool from the recent all-time high down to this low right here, and we can see right now we're at the 75% retrace, approaching this overhead resistance area. So that's a little bit of a puzzle piece information, we'll call it. Are we going to find resistance up and around the 75% retrace near a big fat semi-round number against these highs right here? Certainly a possibility. That's what I'm kind of looking for at this stage in the game. But capital B-U-T. We are the umpires, and we do have to call balls and strikes with an unbiased viewpoint of the market. Bigger picture stuff, going over to a weekly chart. Still above all the moving averages, so the trend is obviously your friend. And last week, all this really was a small pullback in an uptrend. And we already retraced a good portion of that move. Now here's another thing. Remember that trend line we talked about yesterday? Well, today we didn't necessarily come back into it. Came up a little bit short of that trend line, but the most important thing is that we're still closing candles above it, higher than what we closed yesterday. So as of right now, that is the bull case scenario. As long as we're staying above and closing candles above that trend line. Doesn't mean tomorrow or the next day or any time this week we won't come down to that trend line. As we know, anything in the market is possible. Just because we're above it now doesn't mean tomorrow the same situation will apply. The market could potentially go ahead and test this area around the 685, give or take, the big fat semi-round number, find some resistance once again at that area, and then go ahead and make her way back down towards the trend line. That certainly can be a possibility. So what if that area just doesn't act as overhead resistance at all, near that 685, this area right here? Well, we do have a pretty obvious gap up above. That number comes in at 687.39, and then we're pretty much right at the vicinity of the recent all-time high. We'll get to that when the time comes, because I do believe that this area is going to be overhead resistance, at least from an intraday perspective. There could be some good trading opportunities tomorrow in that area. Again, we're going to have those numbers ready, but you just always have to keep in the back of your mind that nothing in the market is 100% certain. Mrs. Market likes to frustrate as many traders as possible. She loves issuing those pies in the face. And that's why we just try to stack up as many reasons as possible to give us the highest probability of a successful and profitable trade. We're not going to take a trade just because that we're approaching an area that's a big fat semi-round number at 685, but when we do have more reasonings to build out the full stack, such as this group of breakdown candle highs. The market already showed you that that area was resistance. On top of that, it's around a 75% retrace. On a weekly chart, you got this big fat breakdown candle high at 685.80. Again, it's not the absolute high, but it's around the area of the high. So we definitely have some things going for us in which we could expect the market to take a little bit of a breather. How you doing in ALL? Allstate Corporation. This is better than State Farm. The lazy swing trader system sent out an entry alert at 193.13 and already gave us our second profit target, locking in a 5.78% gain. Members definitely made a nice chunk of change with this Allstate trade from the lazy swing trader. One thing that I just want to mention, as I was reading the comments from last night's video, someone say they got the alert for ALL, said that they were planning on entering at around 190. They got a little nervous when they saw that it was trading below its entry level, so they didn't get in. That's fine. You have to do what you feel comfortable with. And by the way, this is not me calling you out or anything. I think this is a great teachable moment. With these swing trades, you can't expect them to work out instantly. Okay, we do have those trades. Don't get me wrong, the numbers do work extremely well. There's been days where we've had an entry alert and a profit target alert all in one day. But with swing trades, these are longer term trades. Okay, sometimes they don't work out right off the bat. As you can see, we entered this trade the 20th of August. We had our first profit target November 6th. Okay, so it takes a little bit of time. You gotta let these trades work out. You gotta let them develop a little. You're not gonna put a brisket on a smoker and then open up the smoker every 10 minutes. It's pretty much the same thing with swing trading. You gotta give it time. Time is more important than price. But other than that, nice trade in ALL. If you want trades handed to you on a silver platter and you let the system do all the hard work and all you have to do is execute, then the lazy swing trader is the perfect fit for you. With a 100% win rate last month and in August. The link is in the description below to check out all of the results. The proof. Like I said earlier, today really wasn't a trader's tape. Very, very slow. Watching turtles watch paint dry. We weren't necessarily looking to jump right into something. But regardless of that, let's go over some numbers because they were working today. We had the morning pivot at 679.70, and then scrolling down we have an overhead resistance zone at 680.75 to 681.30. Right at the vertical line is today's activity. We got the morning pivot in green, overhead resistance number 1 and 2, and as you can see just from the look of it, those numbers did indeed work. Right at the vertical line is today's activity. We got the morning pivot in green, the 2 overhead resistance numbers, and just at first glance we can see that the numbers did work. But it was kind of hard to trade this morning. As we could see, we had some of these numbers come up short. Right here we did come up short of the morning pivot, so that is a first time best time situation. We poked our heads through, spiked it by a little, and then ripped it right back up. That was a trader's choice. If you took it, you certainly got paid. With these first time, best time situations coming up this short of the number, you either got to look for a little spike through of the pivot, which is exactly what she did, or you wait for the next number down below. In this case, spiked it, ripped it right up to our first overhead resistance number at 680.75, took them right back down, spent some time underneath the pivot, closing candles below. Looked like we were going to get another leg lower, going over to a 15-minute time frame. You had this big move down, and then you had some consolidation eating time off the clock underneath the pivot. Even this candle right here went all the way back up, touched that number on the dot, and then came right back down, closing candles below. So from the looks of it, it did look like we were going to head lower. Obviously, that wasn't the case. We fought back above it. We had a couple spike the lows and rip it right back up trades in here. Got above it and then ripped it right back up. At that point, we weren't going to trade anything. This was a very dull tape. There wasn't any heavy movement within the morning. We were a bit more on the patient side, looking for something that we truly want. Never got it, but that's okay, because there's always another opportunity around the corner. Speaking of other opportunities around the corner, we got stocks on the move. We had 2 today, and 2 of them did hit their entry targets. So let's go put these numbers up on the board and take a look at what we got. First one we got is CENX, Century Aluminum Company. Spiked through entry number 1, spiked through entry number 2, came up 10 cents short of the stop loss. Remember, we operate on a hourly close basis for the stop. If you averaged in, she did provide you a nice trade, ripping it right back up and made a high of around 29.41. We'll give that a nice trade, and how do you like dem apples? And of course, once we book a profit, we don't let the remaining portion go bad on us. We got CoreWeave next. We hit entry number 1 at 90.02, immediately found support at that number, a little spike through, not a big deal, and then ripped it right back up. Gave you about $2. Came back down, utilized that number as support once again, and then went right back up. So although we didn't have the best opportunities in the spiders, we certainly had some nice ones in stocks on the move. That's what you get with Inside the Numbers. You also get all of this SPY commentary, the game plan, the numbers, the morning and afternoon write-up, literally everything that you need to be a successful and profitable trader. And then not to mention, we always have an opportunity around the corner with the list of 13 different markets with support and resistance numbers we offer. We got the Qs, we got IWM, SMH, Tesla, gold, crude, Bitcoin, oil, silver, the dollar. We got something for everybody. These numbers are updated each and every single day. Let's take a quick trip around the world and take a look at some of the other markets, starting with Camp IWM, my number one favorite market leading indicator. Pretty much a nothing day today. We're up 0.09%. Once again, testing that 244.30 number. We closed pretty much right on it, and we're still closing candles and trading below this trend line. So until we recapture that trend line and start to close candles above, no dice for the upside. But what we do have, as we continue to close candles below it, and these two important numbers closing below that, will open the door to this gap right here. The number's already on the board. That comes in at 241.61. We pretty much had a neutral close for Camp IWM, so really we could go either way, maybe go up, hit that 20 period moving average that is home base, get close to the trend line, or even touch it in that matter. That could be a possibility for tomorrow, and then obviously we have to see how we treat that trend line and see if we continue to use it as overhead resistance. If we do and come back down, then we know that the next destination is going to be to fill this gap and or lower. So on the other side, we got DJT, the transportation department, my second favorite market leading indicator. Comparing it to the IWM, we are closing candles above that trend line. We utilized it as support on the way back down. And now we're approaching this overhead resistance zone up at around 16,330 to 16,500, a big fat semi-round number. We did come up a little bit short of the front end number, so I wouldn't be surprised if we got a little poke through, go ahead to fill this gap right here, maybe get to the midpoint of the two numbers. But I'm expecting this to be a place where the market shouldn't just waltz right through. On the flip side, if we do come back down, retest that trend line, that happens to coincide right with this breakup candle low at 15,886, that should be some initial support, at least from an intraday perspective. If we start to get below that number and that trend line, then we'll go back to test the trifecta of the moving averages and even get back down to that pivot number in green. No real change for the transportation department. What about the Q people? No real change for them either. We're down 0.27%, so I guess a little bit of a divergence there between the Qs and the spiders. We're up in the spiders and down in the Qs. Not going to make a federal case out of it. We're only down 0.27%. Went back to retest that 20 period moving average after coming up short of it yesterday. And one other thing to mention is that unlike the spiders, we did not go ahead and fill this gap right here. As you can see in the spiders, we pretty much stalled out at that gap, stopped moving up once we touched it, and in the Qs, we're still pretty far away from it. So that's definitely some interesting information. Towards the upside, if we start to get above these highs right here, this gap is obviously going to be the next destination up above. But if we can't recapture those highs and we end up coming back down, then the next destination is obviously this gap right here. Okay, the Qs are just kind of hanging around that 20 period moving average, eating some time off the clock. It's pretty much in the stage of which unfinished business they want to take care of first. Either the unfinished business up above this gap right here, or the unfinished business down below this gap right here. Which one is she gonna do first? What's going on in the financials? We're up 0.45% today. And as previously mentioned, we were utilizing this trend line as overhead resistance on the way back up, but now today we got above that trend line, we gapped over it today, went back, utilized it as support on the way back down, and now we're closing candles above it. We closed pretty much right on the 50 period moving average, a little bit above, so technically we are above all the moving averages. It's a little bit too early to say for sure, but we can still come back into that trend line and keep utilizing it as support. As long as we're closing candles above, that is the bull case scenario. If we do get back below the trend line and close candles below the flip side situation, I already have some numbers up on the board that will be a target for the downside, 52.10 to 51.84. Just because we're above the trend line right now doesn't mean the same thing will happen tomorrow. Anything can happen with the snap of the fingers. Going over to a weekly chart real quick, we have been playing around home base for a few weeks now. We closed candles the last week of October below home base, closed below it last week, but today, as of right now, it's only Tuesday, but we're above the 20 period moving average. Really, the next area that XLF is currently working on and trying to get above is this breakdown candle high. The exact high is at 53.43. Then also you have one right above, we'll call it a nice round number, at 54. That's what's going on in the financials, but as you can see, there's nothing wrong with the chart. Therefore, there's nothing wrong with the overall structure of the market. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. Very interesting. We're down 2.16% today, now down below the 20 period moving average. So here's what we got. We found overhead resistance right at this breakdown candle high. The exact high is at 360.15 and the high right here is 360. Came up 15 cents short. Can't split hairs over pennies. That was overhead resistance. We also did come up short of this gap right here at 366.10. So that is some unfinished business towards the upside. And then looking at what we got below, as we are now trading below the 20 period moving average and closing candles below, is this pretty obvious gap right here at 348.12. So we are seeing some weakness in SMH, the semiconductors. If we continue to have some weakness and have some follow through towards the downside, go ahead and complete this gap right here and maybe even lower, then that could certainly have an effect on the other markets, more so the spiders. Maybe this is a little bit of a canary situation, a little bit of an early warning sign. You know, just comparing these markets all together, SMH already found resistance at this group of breakdown candles, came up short of filling the gap right here, and is already trading away from it. Similar situation for the Qs. We haven't reached this gap right here near these breakdown candles. We're just hanging around the 20 period moving average for now, but still haven't reached this area yet. My number one favorite market leading indicator is still trading below this trend line and is pretty much at the brink of the 244.30 number. This zone is very important for Camp IWM. We've seen it time and time again. Closing below those numbers makes me believe that we still have some more downside potential for IWM, possibly going to fill this gap right here and or lower. And then finally comparing it all to the spiders, we did reach that gap, completed the unfinished business. So now the main question is this area going to be overhead resistance? Definitely a little bit of a divergence between multiple markets. SMH came up short, trading away from it. Camp IWM underneath that trend line, and possibly those two numbers. The Q people haven't even touched that number yet. The Qs are in a situation of which unfinished business does she want to go to first, up above or down below. But with SMH showing more weakness today compared to all the other markets that we've seen, it makes me believe that the spiders might want to stall out at that area that we talked about earlier, cool down a little, and possibly head back down. I do think it's a place where we shouldn't just waltz right through. I know I was kind of jumping all over the place, but I just had to do a little bit of a compare and contrast between all the other markets, where they're all at, where they're trading at, and SMH definitely grabbed my attention with the fact that we're down 2.16% and already heading down to this gap right here, below the 20 period moving average. So with that said, we're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐞𝐴𝐴. Please don't forget to like, comment, subscribe on the video, as it helps me and the channel out a lot. With that said, we'll be back ready to go for hump day tomorrow, for the morning session, and the video later that night. I hope each and every one of you has a great rest of your day. Happy Veterans Day, stay safe, and take care now, folks.